The broken system, the financial crisis of 2008 is what led to Bitcoin back in 2009. In today's video, I'll be telling you why the current financial system is broken. I'll be explaining Bitcoin so it's easy to understand, like so you can even explain it to your parents, why you only need 0.1 Bitcoin, and to finish off, we'll get to why the Bitcoin ETF approvals have changed the game and what the price of Bitcoin is going to be by the end of 2024. The current system is broken. To illustrate why the current system is broken, we're going to cover the dollar. This is because the dollar is the current global reserve currency, and all fiat currencies follow the dollar. The dollar replaced the pound as the global reserve currency. With the British Empire in full swing, the pound was the global reserve currency for about 100 years. This was until the Bretton Woods Agreement. Just as World War II was coming to an end, all the major countries on the winning side basically agreed that all currencies would be pegged to the dollar, and the dollar would be pegged to gold. The supply of dollars was linked to the amount of gold in circulation. Now, America broke this agreement by printing a lot of money to pay for expensive wars, like the Korean War or Vietnam, for example. By the way, printing money is QE or quantitative easing. Breaking the Bretton Woods Agreement eventually led to President Nixon removing the gold standard in 1971, making the US dollar a fiat currency. Fiat currency is basically paper money backed by government. This has meant the US has printed dollars, a lot of dollars, for fun over the last few decades. The current financial system is broken, and it's because governments and central banks are doing exactly what they want. They're printing millions and billions and even trillions of fiat currency, and it's causing pain for many families around the world. This loose monetary policy over the last few decades has led to inflation. QE is okay in the short run as many businesses and investors benefit from low interest rates. Some people benefit, but some people, like savers, don't benefit. And in the long run, it leads to inflation, which causes the interest rates to rise, causing the exact opposite of financial stability.
And then even then, you believe that gold is money. The Spaniards go off, conquer the New World, they bring back all the gold. It doesn't solve the problem because they inflate the gold supply by a factor of 5, so they created hyperinflation. Their own economy collapsed, and the Spanish Empire collapsed because they didn't understand the implications of inflating the money supply. And they figured that out the hard way 1,700 years after the Romans figured it out, and they figured it out 500 years after the Greeks figured it out. And it happened in Egypt, and it happened in Assyria, and it happened in China. And it's happened as many times as we can write it down. And it's probably happened 100,000 times that we didn't write down.
Bitcoin simply explained. Personally, it took me 5 years to get Bitcoin. This is one of my biggest mistakes in over 20 years as an investor. If you're new to Bitcoin, this video is going to help you avoid this mistake.
Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY, and you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so it's an asset class. As it goes into other funds, it's going to become structural. The halving is going to cut the organic supply of natural sellers in half around April 20th. That means there's only about $32 million a day of natural sellers. And the price of Bitcoin is going to have to adjust up in order to meet that investor demand. So I think that's what's going to happen next to the asset class.
Bitcoin is so important to the future of money because it's currently the best solution to our broken financial system. Fiat currency can be manipulated. The share price of a company can be manipulated. The price of gold can even be manipulated. Bitcoin cannot be manipulated. Bitcoin can't be manipulated because it's decentralized, meaning governments and banks can't increase the supply and reduce the value. Basically, they can't interfere with it. Bitcoin is safe and secure. Bitcoin has the strongest compute network in the world, according to Anthony Pompliano, and the Pomp, as he's well known as, has serious credibility as an investor. Bitcoin is scarce as there will only ever be 21 million Bitcoin tokens ever. Bitcoin has the potential to be the global reserve currency. At the very least, it forms part of the solution to the broken financial system. The beauty of Bitcoin for me lies in its decentralization. As I've said, it's not controlled by any government or central authority. It's built on a technology called blockchain, which ensures transparency and immutability. Let's go a bit deeper. Now, why is Bitcoin so important? Well, let me break it down for you. First off, it's a hedge against inflation. With central banks printing money like there's no tomorrow, traditional currencies are losing their value. But Bitcoin is different. Its supply is capped at 21 million coins, making it a deflationary asset. Secondly, Bitcoin is borderless. You can send it anywhere in the world instantly without any intermediaries. This is huge, especially for people in countries with unstable currencies or limited access to banking services. Think about people in various parts of Africa. For me, this is so important because it gives them access to money, access they've never had before. And finally, Bitcoin is a store of value. For me, it's digital gold because it's scarce, durable, and increasingly recognized as a legitimate asset by institutional investors. Just look at the recent spot ETF approvals in January 24, and we'll get to that a bit later. Why you only need 0.1 Bitcoin. Before 2022, I was always put off by the price of Bitcoin. But when the penny finally drops for you as an investor, when you understand why it's so important, you'll understand that even 0.1 Bitcoin is a big deal. You see, Bitcoin is divisible up to 8 decimal places. So even if you own just 0.1 Bitcoin, you're part of this revolutionary financial system. And as the adoption grows, even a fraction of Bitcoin could potentially become incredibly valuable. Many experts believe that one Bitcoin will reach $1 million in and around the year 2030. You're talking about experts like Saylor and Cathy and many, many more. So if you buy 0.1 Bitcoin now, in theory, it could be worth $100,000 by the year 2030.
I think the risk-reward proposition for Bitcoin in the year 2024 is better than any other time in the history of the asset because you have institutional adoption, you have regulatory clarity, you see capital coming into the space, and yet still you can do the survey yourself. Ask 100 of your friends if they're fully invested in Bitcoin and if they understand it. And if 95 say no, I would say do your own research. But Bitcoin's 15 years old. So let's look at other great investments. 15 years after Manhattan was founded, was it a good investment? We could start 200 years after Manhattan was founded. In 1776, roll the clock forward, 1791. Was it a good investment? Was real estate in Manhattan in 1791 a good investment? Was it a good investment in 1865 after the Civil War? Was it a good investment in 1970? Was it a good investment 15 years afterwards in, 1995? Was it a good investment in London 20 years ago? 2,000 years after the Romans showed up in London, was it a good investment to buy London property? Right? I mean, these are scarce, desirable properties, right? It's 15 years late is not late.
Why the Bitcoin ETFs have changed the game. The SEC approved the Bitcoin ETFs in January 24, and this was huge for crypto. This was like TradFi traditional finance, acknowledging Bitcoin as an asset class, and the fact that digital gold is here to stay. The demand from institutions like BlackRock and Fidelity has been huge. According to the Financial Times, BlackRock's ETF has reached $10 billion faster than any US ETF in history, and BlackRock's iShares Bitcoin Trust, IBIT, took less than 2 months to hit this milestone. This is the demand from one ETF. There were 11 approved back in January 24. This level of demand from institutions and the continued rate of adoption are why I'm confident that Bitcoin gets to $1 million before the end of this decade. And this is just the demand from the West. there was a lot of interest from institutions in Hong Kong, China, South Korea, etc., etc. And that means a lot of capital that's going to be flown into Bitcoin and crypto in general. This is why the Bitcoin ETF approvals have changed the game. Bitcoin prediction for 2024. To finish off, we'll look at the price of Bitcoin in 2024. For all the reasons I've mentioned throughout this video, like the current rate of adoption and the huge success of the Bitcoin ETFs, I believe that the price for one Bitcoin will reach $100,000 this year. This is just my opinion. Let me know what your prediction is in the comments and your reason for that prediction. This will help other investors in thinking about the direction of Bitcoin and the crypto market as a whole. So imagine you manage to get your hands on 0.1 Bitcoin. If my prediction turns out to be true, that would mean your Bitcoin would be worth $10,000 by the end of this year. If you learn about Bitcoin, if you fully understand its importance to the future of money, I believe you'll realize that most of us investors only need 0.1 Bitcoin. 0.1 Bitcoin is much better than 0 Bitcoin. Obviously, the more you get, the better. Like if you manage to get 1 or 2 Bitcoins, this really will secure your financial future. Again, just an opinion from an investor who's been in crypto for 7 years. But what if you're new to Bitcoin and crypto? You don't know how to buy it, store it, and you certainly don't know when you're meant to sell it, if at all. Well, if you look below in the description, I've got you covered with a video that gives you 15 tips on how to invest during this bull market. This video will hold your hand in 2024 and 2025. Anyway, that's about it for today's video. I really hope you've taken something away from it. Thanks for taking the time to watch this video.